Ready Capital stock, ticker symbol RC. Earlier this year I sold out on this stock, so let's see what happened in the meantime and if I was right selling it. The stock is down 9% year to date, underperforming the S&P 500 big time. But that's not what this stock is about. People love Ready Capital stock for different reasons, and the main thing is the dividend. And I understand why with dividend yield at almost 13%. But the question is, will this be sustainable looking at the payout ratio and growth rates? More on that in a minute. First, let's take a look at the total return in the past 5 years. We see that Ready Capital stock again massively underperformed the S&P 500, and this is including dividends. But could this be the perfect time to buy RC stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Ready Capital do? Ready Capital Corporation is a real estate finance company. It acquires, manages, originates and finances small business, commercial loans to purchase small multifamily, office retail, mixed use or warehouse properties. It's important to understand that Ready Capital is not a REIT, but a finance REIT. Looking at the first quarter highlights, we see that RC had a total investment of $457 million and they declared a $0.3 dividend. Interestingly enough, the net book value is at $13.44 per share, while the current stock price is a little under $10. Looking at the net income year over year, we see that interest income is increasing. However, total non-interest income is at a negative number, while last year it was at a positive number. This is due to a valuation allowance. Down the line, this means less net income for Ready Capital this year, and also a negative EPS. Dividends have decreased from 40 cents to 30 cents. And don't get me wrong, 30% dividend yield is still crazy at this point, but this could be a potential red flag. If dividends are no longer sustainable, then people might leave this stock to garbage in the coming periods. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Ready Capital is a 1.5 billion market cap company. PE ratio is at 6.7, indicating they could be undervalued right now. Later in this video I will show you my 3 price targets for Ready Capital stock, so make sure to watch until the end. Revenue is at 232 million, and in this graph we see that revenue went up in the long run. However, it is really slowing down a lot lately. So this is something to keep your eye on. Companies like RC do rely on growth. Operating margin is going down lately, but nothing that concerns me a lot here right now, since it is a bit diluting with these companies. But net margin is going up and down a lot, which is something that I don't like. I prefer a bit more steady pattern here. EPS is looking pretty steady over a longer period of time. Again, you want to see some increases here at a steady and consistent pace. Analysis expected EPS will decrease big time in 2024. From 2025 on, it is expected to see some big increases again. For the revenue, analysis expect pretty much the same pattern. No growth in 2024 and 2025. The company will start growing again. Return on assets is sitting at 1.85%, which is a low number. Return on equity looks pretty good, and the most important number, return on invested capital, is sitting at 2.5%, which is also a low number, but it is higher versus the 5-year average, which is a good thing. Current ratio is at 0.44, which is a great number. Nothing really special to mention here, to be honest. And right now, Ready Capital has 9 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Ready Capital has 181 million in total cash, so they can't pay down a big chunk of their debt. This is something that I don't like. And to be honest, this could be a potential red flag to me, since it is really out of balance. So it is very important that free cash flow is growing, since this is used to pay down debts of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up and down a lot in the long run. It is not really steady and consistent, so this worries me a bit as well. Shares outstanding are increasing, which is something that I don't like. However, companies like Ready Capital increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in a company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at almost 13%, which is an insane number. Annual payout is at $1.2 and payout ratio is at 115%. We want this number below 80% with companies like RC, so this could be a huge problem. The 5-year growth rate is at -5% and there are no consecutive years of dividend increases. If you take a look at these numbers, the dividends paid since 2014, we see that most recently the company is in trouble with a dividend cut. To me, this is a big red flag. In this graph, we see the expected dividends in 2024, 2025 and 2026. Of course, this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to decrease even further. And overall, these dividends look pretty interesting to me. But how about the historical returns? I decided to compare Ready Capital stock with the overall market. In this case, the S&P 500. On the 5-year chart, we see that Ready Capital underperformed the S&P 500 big time, with only 17.5% return, while the S&P 500 is sitting at 95%. And keep in mind, this is including dividends. On the 1-year chart, things look pretty similar, with again Ready Capital having a much lower return versus the S&P 500, but this time it is even at a negative number. On the 6-month chart, it is again the same story, and RC is barely having a positive return here. On the 1-month chart, however, Ready Capital managed to beat the S&P 500 big time, with a whopping 13% return. Bottom line, the S&P 500 was by far the better investment over the past 5 years. But most recently, Ready Capital is having some momentum. So could this be the perfect time to buy RC stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth, I'm filling in 2, 4 and 6%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin, I'm putting in 42, 44 and 46. For the free cash flow margin, I'm putting in 30, 33 and 36. For the PE ratio, I'm putting in 7, 8 and 9. For the price to free cash flow, I'm putting in the same numbers. My desired annual return is 15%, since I can get an easy 10% average annual return with owning an ETF. Usually I take 12.5%, but with this type of company I want to build in a higher margin of safety. Right now Ready Capital stock is around $9.3. I hit analyze and we see a lot of red numbers. We have a low price target of $3 to $4. We have a mid price target of $4 to $5 and we have a high price target of $5 to $6. And to me the mid to high price target is the most justified here, meaning the stock is still massively overvalued based on these numbers. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on Ready Capital is that it feels like I made the right decision on this company. Don't get me wrong, the dividend yield is amazing. However, the dividends itself are cut not too long ago, and it doesn't look like RC is capable of increasing the dividends in a sustainable way anytime soon. The future growth of this company is also something that worries me a bit. From a valuation point of view, things also look really bad. So for now, I'm skipping this stock and keep analyzing them from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.